Hello, everyone. A warm welcome to another exciting installment of our weekly series dedicated to price action based technical analysis. In this episode, we are delving deep into the fascinating world of the USDJPY market structure. It's been a while since I shared an insight on this asset, but today I'm excited to reveal a crucial juncture in the USDJPY's journey. While the sudden focus, well, it all boils down to the intriguing development in the market. Downside pressure seems to be subsiding primarily due to recent statement from the Bank of Japan's policymakers. They've made it clear that any exit from their ultra easy policy will be hinging on wage and inflation data meeting their expectations, thereby leaving the Japanese yen potentially vulnerable against its rivals. So, what's in store for us as we gear up for the new trading week? Well, I've conducted an in depth analysis of the current market structure using simple parameters such as trend lines, key levels, and chart patterns to gain insight into the historical price movement of this pair. And I can't wait to share my findings with you, which reveals a simple yet promising setup for the new week. But before we dive in, please remember that this video serves as an educational tool and not financial advice. My mission is to empower you with profound insight into the USDJPY chart and boost your proficiency in price action analysis. Remember, forex trading comes with inherent risk, so tread carefully and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's dive right into the business. So, as we transition to the daily time frame, it becomes evident that price action has embarked on a robust bullish journey since the beginning of this year. And if you look at the structure here, you will see that we have a couple of ascending trend lines which further emphasize the strength of the buyers in this market. And after connecting the series of higher lows, this is what I was able to identify here, which of course will be one of the parameters we shall be using to guide our decisions for this week. For those who are with me behind the scenes on this asset, you will recall our discussions about the profound significance and sensitivity surrounding the zone around the, let me zoom in, around the 145 and the 147 area, this zone right here, as you will be seeing on your screen right now. This is no ordinary zone. It's a territory where the Bank of Japan made significant intervention last year, and the looming fear of another intervention has cast a shadow of indecision over the last month. This uncertainty is reflected on the chart, manifesting as a consolidation phase amidst a resilient US economy. Now, here is where things get intriguing. Recent developments emanating from the Bank of Japan have tilted the scales in favor of the US dollar, and from a technical standpoint, we find ourselves in a scenario where sellers seems to be gradually losing their grip, as you will see with these higher lows in the last 2 to 3 weeks in this market, as you will see here. Now, with this scenario here, it is a clear sign that despite this choppy scenario, price had gradually continued to find higher lows in this market. And when we start seeing higher lows in the market, what does this tell us? It gives us a clue that buyers are gradually gaining momentum behind the scenes. And as a result of this observation, I was able to identify a simple setup on the lower time frame, which I think we can use to guide our independent trading decisions for this week. But before I scale down into the lower time frame, there are series of high impact events coming up this week, and in fact, I would like us to run through the economic calendar to have a quick view of what majority in the market will be looking forward to in terms of these fundamental factors. And we all know how these factors manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns, hereby giving us valuable insight into helping us position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. So on the economic calendar, we are going to be focusing on high impact events from both the United States and the Japanese economy. Now, the first high impact event for this week is coming in on Wednesday, September 20th, and that is the Fed interest rate decision. This is the one of the major events we are looking forward to this week. It's a critical tool for managing inflation and supporting economic stability, and majority are looking forward to a no interest rate on this one. Then we have the monetary policy statement, we have the FOMC economic projections, we have the interest rate projections, and of course, finally, we have the FOMC press conference, which will be addressed by the Federal Reserve Chair following the interest rate decision, and of course providing insight into the central bank's economic outlook, policy decisions, and the rationale behind these decisions. Then on Friday, we have the Bank of Japan interest rate decision, then their monetary policy statement, and of course the press conference. Then on that same day, we have the global manufacturing PMI and the global services PMI, both from the US economic docket. So all these events we see here on this calendar, the anticipation of them will of course reflect on the chart as price action. And as technical traders, what we want to be doing here is to sniff through the current market structure to identify structures and patterns that we can use to help us anticipate any potential opportunity ahead of this event. So going down into the 4 hours time frame here, this is what I was able to spot on this time frame. So I would like to hide this one so that we can have a clean chart here. Okay, now this is what I was able to spot on the 4 hours time frame. Now, what I did here was to take into consideration the nature of price action since the beginning of this month, and in fact, if you do that appropriately, you will see that we have a bullish momentum where we have an ascending trend line after connecting the series of higher lows. Now, if you look at the structure from an holistic standpoint, you will see that we have an ascending trend line, which is considered to be an uptrend continuation pattern from a technical standpoint. So if I highlight it, you will see this is what we have here, following that impulsive move that brought us to this point. If you look at the nature of the 147.950, which is going to be serving as my key level for this week, you will see how since the beginning of this month, buyers have been knocking that ceiling with an attempt to break out of that structure. And we all know that if this persists, it will get to a point the ceiling will cave in and incite a breakout and retest of the zone to incite an uptrend scenario. So I'm going to be looking forward to a breakout retest of the 147.950, respecting that ascending trend line one more time to incite an uptrend continuation here. However, you know how we do it in this community. In as much as we're looking out for buying opportunities in this market, we are also going to be taking into consideration the potentials of the sellers too. Now, if the selling pressure below the 147.950 persists, then we might likely be seeing a bearish move to the downside, where the breakdown of that ascending trend line Of course, this will be the first time price will be breaking down that ascending trend line this month so far. And if this happens, this could be a sign that we will be getting ready to sell, and we will need some confirmations like a retest of structure to join that bearish move to the downside. But trust me, I will be with you in the comment section of this channel after monitoring how participants in this market will be reacting to this crucial juncture to give us an estimate of where I think price is likely going to be heading to for the week. If you have found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.